Hey traders, how are we all? Alright, so since I've put up the channel and started making videos, especially when I started teaching Forex, I've had my fair share of keyboard warriors that kind of come out of the woodwork and they'll lash out. And I think it's just easier for people to argue because they're behind a computer screen. But beyond all the insults and the nonsense and all other crap that they dish out, there's this common theme that they have, and that will be such and such has been trading for a very long time, and what you say about trading being easy is complete bullshit, and so you're lying to people. Correct me if I'm wrong. I don't think I've ever said trading is easy. I think I've said the opposite, where trading will really force you to become aware of yourself, right? And more aware of life. If anything, I think trading will make you more spiritual or force you to become more spiritual. And for those of you that are kind of on the awareness path, I'm not going to say spiritual path, just an awareness path to kind of become more and more aware of this world around you and what creates this world and you yourself and how the energies work per se, that you become more and more sensitive to energy. I know I have in the last couple of years, and you guys would have seen me kind of go from being very aggressive in terms of what aspirations I've had to now kind of walking back into myself and kind of just wanting to sit quietly in a corner somewhere or quietly on a mountain somewhere, just kind of looking out at nature and the beauty of it all. A lot of things have changed within me and you guys too. I know many of you that I've been talking to over the last few years, there's tremendous shifts that have happened within yourselves. And I'm not really talking about trading related here, it's just overall in life. One of the key things that I've discovered is that I've just become so sensitive to energy. It's to a point at times where I can kind of just, telepathically converse with someone. It just feels that real. It's weird. Drive my nephews crazy that way. Now, let me get back to the point of this video, which is about whether trading is easy or not. And please do bear with me here. I want you to clearly listen to what I have to say because this will really help you open up better into trading. So, all these keyboard warriors, they're wrong about one thing. Um, I've never said trading is easy. I'm never going to say trading is easy. In fact, I'm going to tell you outright now, trading is probably the hardest thing that you're ever going to do. Remember, a lot of the private sessions I've had, um, I do mention it in there to people that, in my opinion, and I'm like a jack of all trades. I can do everything from build a house to kind of, to some extent, give medical advice, to read minds at times, that sort of stuff. Um, the thing is that I've often found that trading is probably more difficult than kind of even possibly giving um, medical advice to someone, like, for a doctor to diagnose an illness. I've found that sort of stuff for surgery. That is by far so much easier than trading itself. And if any of you have gone out to do, partake in higher education, like maybe do an MBA in particular, anything business related, what you'd find is that uh, the key things that you learn within that higher level of education is the different types of risks that exist when you are venturing into something new, something like whether you're an entrepreneur or just a new vocation for yourself. There are a certain amount of risks, and this applies to overall in life. And the key thing is to be able to identify those risks and then to mitigate them. Once you mitigate those risks, your actual potential loss or waste, it diminishes significantly. It's not to say that with trading where you never have a loss. The potential of losses are always there. It's not to say that I am some kind of oracle that doesn't have the potential of losing trades. Of course I do. How do I mitigate those risks? One of the things that I say to you guys is that become as familiar as you possibly can with your charts, right? So look at the market movements, become an intimately familiar with it. And with the currency pair itself, we're going to start the fundamental series today. The first video is going to go up today. And in it, I'm going to talk about currency pairs as well. You'll get to know about whether, what makes up or what drives the economy linked to that currency. That sort of stuff to the point where you can just say you can feel the rumblings of something happening within the economy and know how the currency pair or that currency in a pair would react. For example, when we heard about the initial rumblings of the tariffs or the trade war between the US and China, what many of you experienced possibly for the first time was that it was the US dollar that was reacting first to whatever the president of China or President Trump was saying. So in that, when you start to understand the reliance, the Australian economy is largely a commodity-based economy, or it's a commodity currency, I should say, the Australian dollar. And so, as a result of that, our two biggest trading partners, China and the US, when they're engaged in something that is going to possibly hinder their economies, that does mean that the Australian economy will be affected as well. So that's the carry-on effect that the Aussie dollar will probably move quicker than the yuan, the renminbi, or the US dollar, right? So we've got to start to understand this intimacy that the economy has with the currency, and also start to understand how the economies work overall, not just within the country, but globally, right? So, what is the position of that country, that economy, that currency within the whole global system? And once we start to become familiar with things like this, become familiar with the structures that currency pairs create, and overall become familiar with the most famous structure when it comes to trading, which is the Elliott wave structure, I can guarantee you that pretty much every trading system out there in some way, shape, or form is built upon the Elliott wave structure. I've had countless arguments with keyboard warriors about this, where it's just constant attacks. It is the Elliott wave structure always that we come back to, always, right? So become familiar with that. I've got videos on this channel that explain the Elliott wave structure. There's numerous books available out there. And for those of you that kind of want to, instead of having to buy some books, something I do, scribed, right? I used to buy Kindle books and physical books to a point where I don't have room in my office anymore for books. And even with Kindle, I actually had to set up a US Amazon account in order to get certain books that were not available in Australia. Now the thing is that since then I've discovered Scribed, and it's just $9 a month that you pay, and there's literally thousands of books that you can read online. So that works for me. And for those of you that are interested, do the same thing. It's a $9 a month fee, and you get access to these books. Go research for yourself, right? So if I've mentioned Elliott wave structure, go become an expert in Elliott wave structure. Go read as much as you can beyond the videos. Guys, I'm not going to go extremely in depth within my videos simply because you're going to bore the hell out of you, and it's going to be way too long, right? So become familiar with that. And as you do become familiar with structures, with candlesticks, with time of day, with the behavior of certain currency pairs, and how they operate within individual sessions, that sort of stuff, their interaction with the EMAs, all of that combined with familiarity with economies, the fundamentals, what drives those currencies, what that's going to do is it's going to mitigate your risk, right? Absolutely mitigate your risk. And once you've done that, what you're going to find is that your in the money percentage rates begin to increase. You should be hitting a number above 90% quite easily, right? That's the first thing that is mandatory. The second thing is that anytime that I come across anyone that sends me an email and says that, Shiva, I couldn't work out a loss here, right? Um, there are a handful where they are trading within the range, and that's or there's not a clear trend, and that's the only mistake that they've made. They've applied the rest of the criteria accurately, but overwhelmingly, most people are missing something that's critical within the criteria, right? Now, let me put it this way. In the last couple of weeks, I really haven't taken any trades. Let's go pound USD. Let me show you this. And this is what you're going to become familiar with. You've got to get to a point where you're starting to recognize market structures. Now, I had a number of people that in this period here, the market moved going up, and then all of this here, where they're trying to do certain types of trades, and they ended up losing money, blowing accounts, or whatever it may be. By far, the majority of them that have kind of sent me the examples of the trades they took, the screenshots, and all of that, pretty much all of them missed criteria, right? The biggest criteria was that they were trading against the actual trend. So when the market started to push up this way, up until, say, this point here, this was completely trading against the trend, right? Because remember, for all extents and purposes, what we're expecting is that price is going to continue with the overall trend. And this is what I mean by the overall trend. It's you've got to be able to justify to yourself that a trend has, or not has, is in existence, right? How? We want to be able to see. Now, again, this is a common theme through hundreds of thousands of videos out there or books when we're talking about a trend. Basically, if the market's trending down, these EMAs, right? Now, I've had Yahoos try and tell me that, Shiva, I should be coding my own EMAs. I don't know how the hell that works. MT4 gives it to you for free. But here's the thing, that when you see EMAs above price, and you see these wave formations starting to happen, and you've got a high here and you've got a low here, and then next thing you see is that price comes up, creates a lower high, and then continues to go down, and then creates a lower low, goes back up to create a lower high, breaks this low here to create a lower low. When you start seeing this, you're in a downtrend, and that's exactly what you're looking for, right? Now here, once price starts to move back up, right, we don't get these lines. Like this is after the fact when I start drawing this in. It's when price is moving up here, and I've got this point here, these points here, and here. That's when I start drawing this in. And as this happens, I keep adjusting this line. Why? Because the more times I adjust it, the more chance of, like for example, when I adjusted this line here, previously I would have added here and here. When I adjusted it back to here and here, notice that this is more of a clear hit, right? So that increases your chances and it reduces my possible risk. Now, I don't put these lines in here so every time it hits, I'm just going to blindly take a trade. The lines are gone in to help me decipher structure that exists, which is going to help me to establish a plan of attack going forward. Now, a couple of you, again, the ones that have done the private sessions, you'd be familiar with, and you'd be laughing right now because I've shown you examples previously where I have waited 2 or 3 weeks for a particular currency pair to set up following what structure has actually been kind of creating for the previous few weeks, right? So you've got to be able to do that. I don't think many people are starting to grasp the fact that the analysis process takes time. And it's not something where you say, okay, here's my analysis, and here's where I'm going to hit it in 15 minutes, in half an hour, in an hour. You can come back to your favorite pairs. I trade the pound pairs because those are the ones that I'm very intimately aware of, right? Their movements, what happens. I keep track of what's happening in regards to British politics and their economy overall, and what the sterling is doing, and what the Bank of England does, that sort of stuff, and who the Bank of England governor is, and who makes the monetary policy there, what the Prime Minister says, Theresa May's way of speaking, so to speak. How does that work? I try and keep abreast of what's going on in regards to Brexit. How does a trade war between the United States, the UK, and possibly even the European Union affect the pound? How will all of that happen? What are the economic indicators that I need to pay attention to? What's the GDP outlook? What's the retail sales looking like? What's the weather doing in England right now? So things like during winter months, if it's freezing over there, if it's cold, you're naturally going to have construction slowing down. You're naturally probably going to have retail sales slowing down. As a result of that, CPI will fall back. As a result of that, GDP will fall back. So that's kind of like the macro environment. We're looking at it and you're understanding the overall personality. It's like when, like many of you guys only are familiar with me based off whatever I say and do in my videos. But there is, and it's like the tip of the iceberg. What you're seeing is only like maybe 1 or 2% of me overall. The rest of me that engages in a whole heap of other things that I do, you're not familiar with. And so what I'm saying is here, everyone, including those people that say they've been trading for a very long time, put the ego aside for a moment, pick 1 or 2 currency pairs, and then go get to know it as intimately as you possibly can. I know a number of you have asked me to kind of do it for you. I've got my information written down in my books, but it's not something that I'm here to do for you. Sure, you want to pay 5-10 grand and I'll share my books with you? Okay, maybe. Actually, no, I can't. Legally, I can't. But the thing is this, that you've got to do that groundwork. It's not as simple as, all right, here's a double top, a double bottom, and I'm going to take that trade. Or, if Shiva just said, if there's an EMA around, or prices around an EMA, I'm just going to hit it because this has to fall or this has to climb. That sort of stuff. You've got to determine, follow the criteria, determine the trend. What bits and pieces do you need as input to be able to determine your trend? Look at that. Once you have determined your trend, see if you're getting any other information when you're on Forex Factory or FX Street or investing.com, reading the articles. What are you picking up there? Is someone talking about a news release that's coming that economists or analysts are saying, well, we're expecting price to be such and such? Again, in the next video that I'm going to put up, which is the fundamental, it's going to be an overall, and hopefully it'll help you understand a little bit more about fundamentals. But once you start to join those dots, it makes sense to you. So become more familiar with it. Go read more. I wouldn't recommend a lot of YouTube videos because you'll get a lot of opinions, but go certainly read more. There's a ton of books that are available online that will help you specialize in these certain areas, currency pairs, that sort of stuff. Okay? Now, again, get back onto point. So when you're looking at the market kind of going against your initial trend, right? The first thing you know is that this is most likely going to get back to a specific point. So what do you need? Analyze, jump onto a higher time frame and try and see if you can analyze to a point where something will make sense to you. So when I jump on the 1 hour chart, right? Remember these guys, when I put up this kind of rectangle, it was in a previous video where we talked about this whole move, right? That's still there. I'll leave it there simply because in some instances when price decides to move back up, maybe a year or 2 years down the track, if I ever get a hit back to here and I'll keep extending this, then I'll remember, because it's not all of the time where I jump on a daily or a weekly chart and go all the way back and say, hey, let me see what the market did in 2014. Right? I will, however, look to see where the market sat in relation to these big moves. So let's go back onto the hourly chart. Now, notice how on a 15-minute chart, when we're looking at this looks big and rough, right? But when we jump onto an hourly chart, we're looking at this where price is moving up. We're looking for previous structure. We're always looking for previous structure, right? So here's where I drew this line in. Right now, what I basically mean by all of this is that I'm looking for a price point that the market will get to. And how do I do it? Well, first of all, this line will be adjusted some way to see where was the previous support area, because that's generally where the market will bounce back up to. Once I've discovered where the previous support area was, right, I will grab my fibs and look for where was the previous high. Now, remember, I generally like to use the positioning of my EMAs for the previous highs and lows. So in this case, this is the most recent high that I see in proportion to where price is kind of getting to. So what I'll do is I'll drop my fib there and then pull it down to whatever the most significant low that I can find. And then what we discover is that, look at that, that's at the 618 point. All right, so that's when this line here gets adjusted and we bring it down to the 618 point. Right, so now we can get rid of our fibs and we leave it there. We'll leave it there and we see what the market does when it gets up to that point. Now, whatever the market does within this area here, we completely ignore because that doesn't really matter to us, right? So we want to pay attention to what the market is going to do once it hits this line and then what sort of behavior it engages in. The other thing, once we move back onto the 15-minute chart, here's what I start paying attention to. So we know that this movement up here is now going against our initial trend, okay? Now, in doing so, I start paying attention to the candlesticks. Are there a lot of wicks? Is price all over the place? Do we have a mix of colors of the red and greens? If there's a lot of that's happening, I stay away from the markets. At the same time, if I turn on the news and I hear things like, okay, there's a new rhetoric of trade wars between the G7 countries. There is something rumbling with North Korea. When there is Brexit votes or Brexit-related votes that need to go through the British Parliament, and that's actually happening, and it's kind of not happening as smoothly as it should. When we see economic data come out that kind of gives us mixed signals, that sort of stuff, that straight away says to me, Shiva, you've got a 2-week holiday coming on from trading, that is. Why? Simply, or not a 2-week, probably about a week, simply because if the market's unsure as to what its driving force is or its driving factor is, how would you know? So, again, to mitigate risk, what we do is we say, if I can become familiar with market movements, if I can become familiar with the causes to market movements, and if I can become familiar to how the market behaves in terms of structures, candlestick patterns, the wicks, etc., when it's beautifully trending and when it's kind of roughly ranging because the market's not so sure as to where it's going, if I can become familiar with that, then I'd say this. My ego is not big enough for me to say, I'm going to take on the market in any condition. I won't. A surfer may like the idea of 10-foot waves or 10-meter waves, whatever they call it. But those may be professionals. I'm not sure if surfers will surf a 10-meter wave. They'd be professionals. But anyone that is just, a hobbyist in that field will not go out there. They'll say, hey, the conditions are perfect now, but if we're getting massive swells happening, those are not ideal conditions for me to be surfing in. In the same way, if you're looking at trading and you are going against the criteria, you're going against the trend, you're trying to trade an environment where candlesticks or the market looks like this or like this, it's all over the place, then you are setting yourself up for failure. And that's just kind of the simple gist of it. When I talk about simplicity, not easy, I talk about simplicity, what I'm focusing upon is to say that it just has to be something that's just so clear to you and it's happening at the right day, at the right time, um, because of the right reasons, with the trend, the structures, the candlestick patterns, the confirmation candle, everything just kind of falls in place. And if you're doing your top-down analysis from the daily chart down to a 15-minute chart, where all these charts are telling you the exact same story, that's your trade opportunity. But if it's not, if one of those pieces is missing, then you're speculating. And I don't care who you think you are or how long you've been trading. If that's what you engage in, you are going to have losses. Simple as that. So don't come to me and say, Shiva, this isn't easy and you're lying to people, because I'm not. I'm telling you, don't trade in that environment. Don't surf when there's 10-meter swells. Simple as that. So become familiar with it. If you need to, zoom out and go through your charts to look to see what the markets look like. Like, I don't draw these lines in just for the heck of it. Look at these are ranging structures, right? Here's where the market breaks outside of this ranging structure and then starts to create lower highs and lower lows. That's when I say, okay, maybe this market's moving. I'll look for fundamental correlation. I'll look for currency pair correlation. And then I would look to apply my everyday criteria again. In this case, when the market's moving back up against me, I need reasons. Is the currency pair now, or is the pound strengthening against the US dollar? If it is, then maybe we're establishing a new Elliott wave structure. And so if I can recognize that, then that's where the market's going to go up or down. The EMA 50 and the EMA 200, this has been happening for such a long time, where if those two cross, in particular it's the EMA 212, but it's just easier kind of aligning with EMA 200. But when we see them cross and there's a significant cross between them, and they start to distance apart from each other, and the reason for that distance is a very strong trend run, chances are that once price then starts to consolidate after that, that you have, or you are in the first wave of an Elliott wave structure. That's how we recognize it. And if that's the case, that's where I say market will most likely consolidate, pull back towards your EMA 50 or your 200, give you a structure plus candlestick pattern at the EMA at a session open, probably London or New York, simply because that's where the bulk of the news releases happen. That's where the reasons for the movement will occur, and that's when then the market starts moving in the direction that you've predicted. That most likely is now you entering into the third wave of an Elliott wave structure on a smaller pattern, right? So something along those lines. But if you're going to trade in this sort of an environment against the trend, against criteria, then look, I really can't help you there. Like, you're gonna lose money, and if you do it knowingly, then again, that's more of like something to do with the mind. You've got to look to see within yourself as to why you're ignoring the setups, or sorry, the criteria, or why you're doing whatever you're doing knowingly. All right. So just to confirm that, the last couple of weeks the market's been in more of a range or a corrective structure. So the ideal thing to do would have been not to trade, and you would have been able to just kind of go through the currency pairs, zoom out and have a look to see what the market's doing. Like, when it's all over the place, then you don't trade. Now, when the market's ranging, or the market fundamentally is not doing what you think it should be doing, or I should say fundamentally where you're seeing that there's no clear reason for a trend run, look to only trade majors. Don't trade cross pairs, because cross pairs will confuse the hell out of you in those instances. Because in this case, we'll say pound AUD. How's the Aussie dollar being affected by the trade war stuff? And at the same time, if the UK is directly involved in the trade war, then how is that currency going to be affected? And then you apply economic fundamentals to the actual pound, and it can get very complicated, right? So please be mindful of that, and stick to mainly majors. The other thing is that as you become familiar with the fundamentals, you'll start to realize that the two safety nets in terms of currency that the world has is the JPY and the CHF, the Swiss franc, right? And in the fundamentals videos, I will explain what those safety nets actually mean. But in times of, say, economic political turmoil, what you're going to find is that money or smart money starts moving into the yen or the Swiss franc. Um, when there is like possible war, generally speaking, money will start moving into the Swiss franc more so. Why? Swiss franc really has a huge backing of gold. That's one thing. Plus, they are a neutral country and neutral currency. So it's generally considered to be a safer currency, and you'll see the foreign exchange markets move money into that. It's not a significant reserve currency, but it certainly is something that's more of like a safety net for the smart money out there. Okay? Now, let me just finish off with saying again, you have to do your work to become as familiar as you possibly can with market movements, be as familiar as you possibly can with all the risks that are in existence, and take all measures that are necessary to mitigate all of those risks, right? Become intimately familiar with the currency pairs that you trade. Utilize the other currency pairs for correlation purposes, right? So when I'm looking at all these currency pairs, I don't trade all of these currency pairs. I certainly do pay attention to what they're doing because they help me correlate with the pairs that I do trade. So the CHF pairs, I know I've mentioned this in a previous video, but the CHF pairs in particular, because it's more of like a neutral currency, the Swiss franc, that if I see, say, pound CHF or euro CHF moving in a specific direction, generally speaking, what I would accept is that it's the pound or the euro that's causing that move to happen, right? So weakness or strength, and the pound or the euro is causing that to happen, and for that reason, it helps me confirm the moves that I'm about to take with pound USD or pound JPY or euro JPY, and in probably a rare occasion, euro USD. Okay, so please do that. No, trading isn't easy in any asset class, but if you simplify it and you keep away from all of the nonsense, then you can establish consistency. And it's that consistency that will, at the end of the day, help you live more of a free life and possibly even help you to maybe give up a day job and free up more time to do other things. Now, the last thing that I want to mention here is this. The smartest thing to do in life when it comes to money or income is to diversify, right? And the reason for that diversification is that you never know at what point what is going to happen with what asset class. So as you diversify your money, your returns are going to come from all over the place. And as a result of, say, the market crash happening or whatever it may be, if you get hit in one sector of your portfolio, the rest will keep you up. So you don't get wiped out. In the same way, there's a number of people that have written to me and informed me about blowing their accounts. And primarily the cause was they were onboarding too much risk. Right, so instead of kind of steadily growing their account from like a mini to standard to maybe two standards as their account grows, they jumped from one standard to two standards to 5 to 10 within like the space of like a few days, right? That's false confidence. That's whatever it is. And a lot of the time, some of these people lash out at me because they do not want to take responsibility. If you want to be a trader, you've got to harden up. You've got to be able to take responsibility for your own actions. You've got to be able to justify to yourself the trade entries you take and the trade entries you exit. And every single time you F up, every time you muck up, learn from it. Become better, become stronger from that. If you don't, there's nothing that I can do to help you. Okay? So please put in that time, please put in that effort, become familiar, and what else was there? Diversify. Diversify as much as you can. If you get some income coming through, some profits, invest in, say, brick and mortar businesses, or start a business from home. Set up something online. Set up a blog if you can. Set up a website. Learn to develop. I'm going to create a separate video where I'll talk about some of these things, but um, please, like, the greatest, actually, there's a 16-year-old who reached out and asked me to mentor him. And one of the key things that I said to him was that the next, or it's already happening, information is or knowledge is your biggest asset that you could have in life. And right now is possibly the best time for that we're living in, because back in our day, we didn't have the internet. We did not have access to so much information. Or when I talk about Scribe, that I didn't have pay a $9 monthly fee and get access to thousands upon thousands of books and documents and audio files and things like that, where you can just literally just learn. Where right now, I'm teaching myself to develop across the board, from cryptocurrencies to all the various programming languages, to web development, to app development, all of that sort of stuff. Like, in some way, shape, or form, all the various business ideas I have, instead of me forking out thousands of dollars to developers and then trying to sell them on my concept, I can just do it myself. So, you know, there's so many things that you guys can do. So work on it, learn, create, develop yourself, and evolve. And as you invest in your knowledge, you will start to become more and more wealthy, because it's just that knowledge is going to do away with all the risks. It's going to mitigate those risks for you. All right, guys. So that's it for this video.